Hello, welcome everyone. I believe this is our 10th webinar here at Cannasure, and over my 3 years of being at Cannasure, to all of my LinkedIn friends for sharing the happy anniversary to me. Thank you very much. Appreciate that. It's always fun to get the love. Today's webinar will be hosted by and presented by Kieran O'Rourke, Cannassure's underwriting manager and MGA architect, and Mary Stone from 180 Intermediaries, who is our senior underwriter in the flood division and has been a fantastic program partner to Cannasure. I wanted to start today with another thank you for everyone's patience that has witnessed our transition from a carrier, another carrier, to Sutton National and Sutton Specialty. As I've witnessed over my career in the MGA space, which has been 2/3 of my insurance career, interestingly, to me at least, it seems like the carrier change always begats a systems glitch. And boy, have we enjoyed that over the course of the last 2 months. And everyone has been unbelievably patient with us, and our deepest thank yous to you guys. It's just a rough and tumble moment as we've had to go through a complete system debugging. But what's crazy is we've enjoyed our best May ever in the history of the company. So hard to balance those two things out, which I think is really the yeoman's work of all of our teammates here at Cannasure and the patience and support that you, our agents, have provided to us, obviously short term and then over the history of our time together. So I think we've dug out. I think we're ready to go. And we know that new business quotes are coming out the door. We know we've got some other challenges to fix in terms of getting some endorsements completed and back into your hands, but I think we're looking pretty good now. I wanted to tease something up. It's going to be a few months down the road, but the opportunity that Sutton brings forward is something that we would not have anticipated. And that is the fact that they have an admitted carrier in their mix. And we know, as well as many of you know, the state of Michigan requires an admitted carrier for general liability coverage from one of their quirky laws that they recently passed. Well, with Sutton having an admitted carrier, we have taken the opportunity to do the marketplace research, to share forms and coverages, get an idea of pricing. And over the course of the next few months, we will do all the work necessary to get that in the system, make sure that we're prepared for going live. And hopefully that's as we go with the fingers crossed, a third quarter opportunity for our agents across the country, because we know it's not just a Michigan issue relative to your location. Many of our multi-state accounts will have Michigan operations, and the ability to offer up the attestation coverage within the quirky Michigan law is the thing that we're solving. So fingers crossed that that goes through as anticipated. So let's get going today. From a housekeeping standpoint, we would love your questions to be memorialized by utilizing your Zoom controls under Q&A instead of chat. So please put those in Q&A so we can bring those forward and share the entire presentation after we're finished. So we're going to send you some really cool insights from Mary as she concludes her presentation. There's not too much on the slides today, but the slides will come as well as a recording of the presentation. And then of course your questions that we'll answer both live and then after the fact, if need be. So with that, let's turn it over to Kieran O'Rourke, underwriting manager here at Cannasure, to share insights on our MGA program. Mr. O'Rourke.
Thank you, Jim. It's a pleasure to be here with everybody again on one of these great Cannasure MGA discussions that we present. I believe it's quarterly. Jim?
Like that?
You know, there's that saying, I think everybody's heard it at least once in their life, that when one door closes, another one opens, right? So, you know, we had the inevitable happen within the MGA, a carrier change. And, you know, I mean, there's another old saying that says, you know, the first thing you do when you sign up a new carrier is you start looking for the next carrier. We're not doing that, just yet. But what it speaks to is the inevitability of the comings and goings of carrier partners within MGA programs. So this is not new ground. This is not something that has never happened before. We deal with it and we move on. And one of the doors that opened to us with the advent of Sutton becoming our main carrier partner is that we now have the ability for an even greater limit structure on property. It takes a little bit more work because of the partners involved, but that is one thing that is a super duper positive, we think, that came out of this, is a bona fide, regular, proven ability to get even more limit than we were previously able to offer. And given the fact that some of these insureds are continuing to build and continuing to increase limit and their need for insurance on it, we feel pretty good about where we're positioned going forward, coming out of this transition. So my first point that I wanted to make today for sure was limits. We've got more than we had before, simply put. My next plea, if you will, to all of you out there that are placing business is that we are still very, very interested in attaching property limits above that primary dollar. So a typical scenario might be that you've got 25 million placed and you need somebody to sit on top of that 25. And we would really like that phone call. Jim would like that phone call. Anybody here would like that phone call. Hey, what can you do? I need somebody to attach at 25 or 30 or 15 or what have you. Our ability to deploy limits on something other than a traditional $1 remains, and we are still very interested in doing that. So please, give us that call. Let us know what you've got. We want to talk about the excess property potential that your insured might benefit from. Another item that seems to have come along with this transition on the bright side, the silver lining side, is that 5x1 excess layer over the GL. For those of you that have been around this program for a while, you know that within the main program, we have the ability to go 5x1 over the GL only, because of course we do 5 million all primary on the products. So we can get up to 6 million on the premises liability. What some of you have noticed over the years, and what we readily admit, is that our pricing for those excess layers has been less than admirable. As I guess we continue to say in the cannabis space, they were high. So got that one out of the way early.
Yeah.
But what we did was we took the opportunity to retool those rates for that 5x1 layer. And I think what you'll find is that on a typical minimum premium, the premium need for that 5 million is down about 35%. So what this means is obviously we want to sell more of it. Those first couple layers over the one are a lot more reasonable and a lot more matched up with what the primary 1 million on the underlying would develop. So excess GL pricing 5x1 price to sell, and we're very happy to announce that we have significant premium decreases in that area. I want to talk about some application changes. I think the last edition date on the current application is 2019, and so well overdue for a redo, for a rewrite. And I think it's also time, given our long knowledge of this business and the thousands of accounts that we have issued policies for, that we simplify it somewhat and consolidate the things that we would, do a supplemental of a supplemental on. So look for that. It's it's a bit of a tedious process, and we want to make sure that it's right. We want the, the fillable areas of that PDF to work properly. So few moving parts and what have you, and just a little bit more patience, and we should be coming out with that, something that will combine all of the disparate supplementals to the supplemental, and B, also recognize the fact that we know this industry pretty doggone well these days, and some of the questions may not be as pertinent as they once were. Next thing I want to talk about is losses in lighting, I should say. I think not just our program here at Cannasure, but programs that we compete against, I think they would all say the same thing, that some of the losses have been extraordinarily large, and the one thing they all have in common is they were caused by some type of grow house lighting problem, mainly with non-LED lights. So just wanted to update that, the dollars of losses overwhelmingly from lighting caused problems. And the answer to that is, hey, everybody should just buy LED. Well, that's easier said than done. So we're going to continue to ask about lighting and what kind do you have, and if you're looking to upgrade, when are you going to upgrade? We understand that there's really no such thing as a 100% total LED. Growers have reasons for different lighting in different phases. We understand that. But what we want to see is a lot of LED, and we're willing to price that accordingly. We don't want to just ask for it and then not give something in return. We understand how that works as well. So we're going to continue to keep asking about lights. We want to be reasonable about it. We do have kind of a two-tier deal going where new business is looked at a little differently than renewals. We value our renewals, and our goal is to keep every one of them. So we're going to look at that a little bit different, but understand that the scrutiny on the lighting is going to continue. And then lastly, I want to talk a little bit about the number of states that the program is available in. Prior to the carrier change, we were a little bit limited. When states made a move, we were not exactly matching that move with the speed that was going to be necessary to meet the market. So if you have business in a state that you really hadn't thought about the MGA program for, I ask you to think again, because with this carrier change, we are able to move into states a little more freer and a little quicker than we had prior to that. So with that, I will turn this over to back to Jim, and we'll move on to our next speaker.
Because what you do with a team, you put your best person at the anchor. So that's where Mary's going to close for us. But I'll take some middle relief right now. And the reason why I'm doing these baseball references is Kieran has a baseball that he tends to use as he thinks. And if you remember that movie, A Few Good Men with Tom Cruise, and he always was looking for something, it was a baseball bat, but we'll go with Kieran's baseball in terms of all of our little references today. I don't know if you guys were checking the news out. I just happened to see it today in the New York Post, which isn't usually my first piece of, what would that be? Internet news or whatever, I'm saying that poorly. There's 300,000 pounds of cannabis that is basically sitting around in the state of New York because of the anticipation of the ramp up. The licenses have been so slow to come out and have slowed down the real estate opportunities for the cannabis licensees that there's a glut. So Governor Hochul has said, hey, we should have cannabis sales at festivals. Let's go to farmers markets and have that cannabis sold. Well, those are two normal things in the MGA world for cannabis operations. So we're going to utilize our brokerage market, which of course is the purpose of my long-winded segue, is to talk about what we're doing when things don't fit our MGA. And it is fascinating that things like that happen. There was a ramp up in New Jersey, thankfully, because they had a lot of other medical facilities that they could utilize those to sell, the pot that was grown there. But New York didn't really have that to the same infrastructure degree. So the governor had to call, a bullpen shot there and say, we need to do something different, brought out the lefty and has decided to, sell cannabis in non-traditional areas. So watch for that, but we're talking to the markets that we use for general liability on what solutions can we bring forward when these types of things hit the marketplace and they don't fit the MGA program in this, in the normal course of business. But you've probably seen, maybe you saw yesterday, I think it was, the My New Markets comes out in our insurance world. It's a daily heads up on what's new, different, being promoted. There's some forums and discussion boards. But in yesterday's edition, we had the opportunity to share that we have a national workers' compensation market, which has been our tried and true market. But we really did it because we have a brand new market as well. We're not going to name names because we try not to do that to protect the innocent. But we now have two national workers' compensation markets, one of which likes the state of New York, one of which does not like the state of New York. And that's why we decided to add to our brokerage unit for multiple workers' compensation opportunities. Our success seems to be on MSOs or multi-state operators or multi-state accounts. We've interestingly seen some accounts be separate ownership because of the way the industry is working. So there might not be combinability, which is 50.1% of the same ownership at two different places. It might be someone's got 60-40 here, or someone's got 30%, but they have a group of investors for the other location. Those aren't going to be combinable, but they can be underwritten at the same time. And we've got markets that will do that for you. That comp has probably been our biggest area of success in terms of rounding out accounts, premium production, as well as the assist to you agents out there, seeking the compulsory coverage account. But on the front end of these opportunities is when someone's newly licensed and needs to help build out or a renovation project or ground up if they had the money. And that's obviously a builder's risk opportunity. And with builder's risk comes the opportunity for us to complement your efforts to place coverage in the cannabis space. Cannabis has always been tricky. That word is said out loud and all of a sudden all markets turn the other way. And we continue to bolster our brokerage unit by seeking out builder's risk markets as we assist you in the placement when someone has just gotten that fresh license, ink's just dried, and now the construction renovation ground up process begins. We've got markets to help you there. And also on the front end of that, and I would tell you that this has been most active in the state of Alabama, bonds. Cannasure for its opening time has been active writing bonds, but we don't promote it that much, probably because it's not a big revenue generator, but boy, is it a headache solver. And we've got a great team led by one of our best and one of our longest term employees here, Chrissy Dougherty, shout out, who's been fantastic in our bond unit and writing bonds across all states with a couple different markets, and has really been helpful to the agents that we've worked with over the years, because you have to start somewhere. And once that license, in fact, sometimes it's pre-licensed bonds or it's a licensed bond that she's placing. So again, in terms of the life cycle of a cannabis thought, might be bonds, all the builder's risk, and then do they hire employees yet? Workers' comp, and then when they launch, the rest of the package. Speaking of package or general liability coverage, it is probably our second largest premium bank, which would be surprising to most because of our MGA success and the expanded and robust appetite we have at the MGA. But there are things that fall outside. Great example would be delivery operations. The MGA is just not going to be in that space. And so, another one is labs, testing labs, where we might have appetite, but we know there might be a better form in the marketplace. So we'll utilize some of our brokerage teammates in our brokerage markets to help place general liability for our retail partners. And last but not least, another and probably more recent area of success has been employment practices liability. We've received a handful of submissions lately with success in placing them, and it's been fun to not only find new markets, create relationships, but solve problems. And I'd like to conclude on that note that we're here in the brokerage unit to solve problems. And when the MGA has to say no for reasons of coverage, fit, protection class issues, whatever those issues might be, we're going to immediately move to the brokerage unit and try to find your yes and try to find your answers. So thank you for indulging me there. And speaking of our brokerage unit, we started talking about flood a bit ago. And then all of a sudden, we were introduced to one of our cousins in the 180 world. And Mary Stone said, I've got a tremendous amount of flood experience. Would you, allow me to educate your team? And not only did we say, please, Mary, then we said, hey, Mary, can you talk to our agents out there and help educate them and share your capabilities? So why don't you do that today, Mary?
Thanks, and thank you for the introduction. I'd like to thank the team at Cannasure for having me, along with everyone out here making the time to join today and allow me to speak a little on flood. Just a little flood facts, flooding has actually cost U.S. taxpayers more than $850 billion since 2000 and is responsible for 2/3 of the cost of all natural disasters. From small towns to large cities, floods have inundated homes, cut off communities, and left scars across the whole country. America specifically has experienced an urban flooding event once every 2 to 3 days for the past 25 years, with an average cost of $4.6 billion per any major catastrophe. So in 2022, there was actually 19 major flooding events in the US. The vast majority of flood victims are uninsured. For example, an estimated 76% of overall damage from Hurricane Irma and Harvey in 2017 were uninsured, just to give you an idea of the amount. 40% of small businesses alone actually might not have ever reopened their doors following a flooding disaster. My experience came really with flood started about 7 to 8 years ago, working with a write your own carrier with the NFIP. During that time, I was actually blind to coverage for flood insurance from FEMA, excluding buildings used to manufacture or distribute a controlled substance, in this case, marijuana. In all the years, nothing actually came across my desk that indicated or questions if a property being insured was used for cannabis occupancy. I hadn't even considered it, honestly. And now looking at all the challenges, the agents and the clients you guys are facing to even obtain coverage, I definitely have to give you a pat on the back. In my mind, I've always treated your clients just like any other business owners or investors, in the same way a retail or distribution company is just trying to protect their property and investment. How I see the process is they could be selling and distributing something like nail polish and are trying to be, a good owner and protect their business in case something strikes. However, due to the federal regulations, carriers do not see that the same way, and provisions in their policy form will exclude marijuana specifically. So it kind of leaves us on the back end. My team was approached, and we've been actively meeting with our domestic and international markets individually to go over their program underwriting guidelines and actually provide available options. I do want you all to keep in mind that flood specifically is ever changing. It's very fluid, and especially in the aftermath of Hurricane Ian, challenges are happening often in all states. So definitely things are changing and wrapping up. So we want to be completely transparent. It's hard placement right now, specifically in Florida, Louisiana as usual, anything south of 10 in California. But we are looking, of course, at flood being offered, and we definitely hope to have more markets available in the upcoming future. And we have forward momentum for new market capabilities, as well as in-house binding authorities for cannabis occupancy. I just kind of want to go over this slide a little bit of some of the things we do offer. We offer coverage for all flood zones. So whether it's the X zone, which is a non-special flood hazard area, AE or V zones as well. So that wouldn't matter in the private market. Building and business owner personal property coverage for building owners and landlords. That's actually probably one of the easiest ones to obtain for the building owners coverage specifically. A lot more markets are open to the building over the contents, but we do have some business personal property and contents. So we'll actually cover contents to be available for standard items like shelving, registers, office furniture, etc. And then not limited to as well completed stock. Certain underwriters and carriers we are working with actually do not exclude cannabis related businesses from coverage. So the written provisions of the policy will prevail. For commercial stock that's covered, it covers merchandise held in storage or for sale, whether raw material, in process, or finished goods. So that's what we like to hear. Coming up, we also include for leased property, tenants, betterments, and improvements, as well as BI, business interruption, loss of rents as well, can be added. Also, of course, I do want to include that we have deductible options anywhere up to 50,000. We can even look towards layering a private primary policy as well as layering for an excess coverage, some meet max limits. We do right now do up to 15 million coverage limit per a single building. And then no elevation certificates required, and even an optional no waiting period. Currently, we are in all states except Alaska, depending on the carrier and the risk. I just want you to keep in mind, loss history is very important with flood. Typically any location with more than 2 losses is not going to be covered at this time. 1 loss will be looked at on a case-by-case basis, and depending on the claims amounts and any provisions taken to actually mitigate flood efforts for the future. Currently, there's no coverage available for buildings located in a COBRA or a barrier island. And just keep in mind when you're submitting over, so we can give to the carriers, a good submission would include a statement of values, Excel format, target premium, any loss history that had been in the past for any of the locations with flood, and the coverage limits. Typically, the more information, the better. So if you have an EC, you can send it on over. We'll be more than happy to, add that. The ECs will not be used if they're not beneficial to the actual location. So we're just looking forward to working with you guys in the future and seeing what we can do as this grows, and hopefully get some more business owners out there flood coverage, just in case something does hit, God forbid. So yeah, that's really all I have. I'm not the best at these, by the way, so.
All right. No, great, Mary, thank you. Sorry, we were trying to get muted or unmuted here. Thank you for the information. I had a question for you.
Mhm.
I know that Florida's been a tricky state lately. Can you share some insights on the state of Florida specifically? Because I know questions come up.
Florida keeps me up at night on most occasions right now, due to the loss and aftermath of Hurricane Ian. A lot of insurance aggregate is very scarce in the area. So even homeowners and residential are fighting. We're seeing a lot of non-renewals. I can tell you, coming across every day on my desk right now is submissions looking for excess coverage. One, because it's either tripled in premium for their location, or they're non-renewing with the carrier. But what do you do when, it's a non-renewal for one property and then 3 or 4 other markets don't want to have anything to do with it, and you're getting declinations? So we're trying all options available, but I feel like it's a fight for the aggregate right now in Florida. We'll send over submissions, and we need 7 million in coverage, and they're like, well, you can have 1 or 2. So it's a real shame for property owners and business owners where they want to protect their investment, protect their that's their livelihood, and they can't get coverage, or a lender's requiring coverage, force placing coverage, and then telling them it's a requirement to get a loan or a refinance. And they're trying, we have, agents and insureds trying to get coverage, they want to have it. And when it's either tripled in premiums, or they can't afford $100,000 policy that was $12,000, or, now it's not even being offered for them for their location. So, it's very upsetting to see that kind of thing be turned away on a daily basis, where there's just no placement for it.
Wow.
Also, a lot of things we have coming through in the flood world is, business personal, business properties, BPPs, everything's coming over, where it had a flood endorsement from the commercial side. And suddenly the flood endorsement no longer exists for them. And so it's coming in. I had one that was about a $10,000 flood endorsement for 10 million in coverage on their BPP policy. It's coming back now, non-renewed. They need the flood. They have to have it for their contracts, and it's over $100,000. You know, so imagine the sticker shock as well that's being included. So there's a lot of fun things going on right now in the world of flood. But I just feel for the owners of the property and the clients, you know, not able to get that coverage when they need it.
Another question that came in was on MSOs or multiple state operations. Any issues on your end? Obviously, you mentioned Florida just now as a challenging state, but is there any issues in terms of infrastructure, multiple policies, single policy, multiple states? Can you share that?
We love a spread of risk across multiple states. So that's definitely not a problem. It might come back decline for certain states like that are having issues or based on underwriting risk for per location, but it wouldn't hold up an entire quote. So definitely we like schedules, multiple locations across different states to spread out that risk. So the underwriters are more than likely to take on. Let's see, schedules really, you know, we can even branch it out if need to be, like if we reach a max TIV for the carrier, but if it's in multiple states, we can do policies and break it down, you know, per state as well, on any SOV we get. So there is a few options with that.
Sure. Kieran, you got a question in that was on lesser's risk only. Any appetite issues there?
No, we continue to love LROs. You know, we have a couple underwriting stipulations. We need to have the majority of the rented space be in a cannabis exposure. And we need something somewhat easy in the non-cannabis part if it's not 100%. But you know, we have been very welcoming of LRO business from day one, and it has always worked out for us. It is not disappointed. So yeah, LRO business is highly sought after by us.
Gotcha. Looks like we have one final question. It was on the states of Maryland and Minnesota, both of which have come into the marketplace. Maryland's going live July 1st is what I understand. And then Minnesota, the governor just signed the bill. Brand new states, any concerns in the MGA program?
No, for neither one. We don't have concerns in either. Of course, we have enjoyed a long relationship with state of Maryland as they've been medical only, and we're very excited to see them move to adult use. And you know, we're ready to make the adjustments, send it in, you know, sales or inventory or what have you. We want to be there for the big switchover.
And no issues with new ventures, correct?
Nope, no issues at all. This whole legal pot is one big new venture.
That's true. I think that's all the questions I see from my end. Grace, I trust that that's true. Back room. If there's any questions that come up late, everyone knows my email address, or you can utilize, as on the screen, info@cannasure.com to submit any questions that you might have after our conclusion here today. But Mary, thank you for sharing your knowledge. We'll get the information you shared out to our group of agents. Kieran, thank you as well for your time and insights today.
My pleasure.
And then, of course, to our wonderful agents and brokers who have really put Cannasure on the map, continue to support us and share opportunities with us. Truly appreciate your time and the work you've done with us. Let's keep it going. Let's have a great 2023 as we close out the year. Thanks, everybody.
Thank you. Have a great day.